Thursday, everybody. How's it going? It's Scott Criss with the Mortgage Rate Forecast. It is April 14th. Let's get going. Here's what we have on the charts. We can see that we've seen a little bit of sell-off, but keep in mind, day before yesterday, this sell-off right here was actually, part of that was a rollover, so it's really not as bad as it looks. We're trading at $102.47 this morning, and we are coming in about $102.40 in support. We can see that right here. Our resistance level on bonds today is about 103, and so pretty high trading range. We did break out of this upward trading channel, as you can see. Here's what we got. Jobless claims didn't really help bonds, but the CPI inflation came in at 1%. Target was 2%. So just a little blooper, and guess what? Our economy has deflation. And deflation is obviously not good for our economy, but it is good for bonds. So CPI core, that came in pretty poor as well, another helper of bonds on the markets. And so here's where we're at. Freddie just released their averages for March. For March, they reported the average rate in the United States to come in at 3.69% at a half of a point cost. And so if right now, and that was about an average trading of about $102. So if right now we're trading at 102.47, hey, we're up 47 basis points, which means instead of paying a half a point, you're paying almost no points for that 3.69 average rate. So that's kind of cool. We are trading better than our averages in February. So what about the forecast? Here's what we got. Neil's coming in and he's staying on a neutral position on bonds on both the short term and the long term. So he thinks the bonds are just going to trade pretty flat for a while. Now Dan Rawich, he's coming in neutral. You can see that by the charts, and it makes sense why he's neutral. But with that CPI coming in as poor as it has, that's just a really good sign that the Fed's probably going to really hold back on increasing the short-term rate, and we probably could see some rally in the bond market. So anyway, a little bit of inconsistency between the two analysts, but the consistency we do see is neutral on the short with neutral on the long with a bias toward bonds improving. So at any rate, here's my information. If you'd like more details, let me know. We'd love for you to like this video because it doesn't hurt to like a video, right? And leave your comments down below. Would love to hear back from you, and I respond to all comments. I was on vacation, so I need a little bit of catching up to do, but anyway, guys, would love to hear back from you. And if it's your first time on the channel, up here you can subscribe. Just click there and you'll get notifications when I release new market updates and forecasts. And if none of the bond charts really made sense to you, you're like, hey, why do interest rates go up and down based on economic reports? It's okay. It's not easy to understand at first. Click here. This will take you to Mortgage Bonds 101 and give you a brief education on how this stuff works. Anyway, take care, guys. Have a great weekend if we don't talk, and talk to you soon.